Good morning, everyone. I'm Peter Kovacs. I'm the editor of the Times-Picayune and the Advocate, and welcome to our town hall about insurance issues in Hurricane Ida. Our guest is going to be Insurance Commissioner Jim Donelon. Hi.
Good morning.
He has been Insurance Commissioner for 15 years, since early '06, so right after Katrina. Our experience always is that when a bad hurricane comes through Louisiana, it starts out with people are interested in what their damage was, then they're interested in when the electricity is coming back, then they're interested in whether they can get gasoline for their generator, and eventually they're interested in why their insurance company won't pay what they think it should pay, and that's where the commissioner comes in. So we appreciate you joining us today to answer questions that were sent in by our readers. And maybe the best way to start is that judging from the questions, most readers seem to feel like your duty as an elected official is to help them get what they want from their insurance company. But I know from having talked to you in the past, another part of being insurance commissioner is that you need to keep insurance companies in Louisiana. And after Katrina, that was a big problem with the recovery. So maybe if you could sort of explain the role of the commissioner in adjudicating these disputes.
It's simple in that my mission, my directive, my obligation under my oath of office is to make insurance affordable and available. So that is the tightrope that I have to walk in regulating insurers on behalf of consumers, which all of us 55 regulators of insurance at the state level, as is the case in all 50 states, plus the district and the territories. We all pronounce and believe that our first obligation and duty is to protect consumers in this very complicated, very expensive, and absolutely vital part of their lives, both in their personal lives at home and in their business lives in the workplace. So that is the balancing act that insurance regulators like myself have to manage. And I would say it's probably as challenging in Louisiana as any state in America, with our vulnerability to flooding events and then the horrific hurricane events that we've had last year and this year. But I always hasten to point out that's not inevitable and always going to be the way it is. The iconic first ever worst hurricane hit us and Florida in 1992, Hurricane Andrew. And then Florida went 10 years before they had another serious hurricane event visit their state. We've had 8 years up until this year, actually last year, quiet hurricane seasons, resulting in the cost of homeowners insurance increasing only 1% per year for each of those 8 years. But oh my goodness, last year we had a historic, record-breaking 5 named storms visit our state, and Laura crushed the southwest corner of our state. The 3 hurricane events, Laura, Delta, and Zeta, cost insurers $10.1 billion in paid losses. And the strength of Laura and the devastation of Laura was very comparable to what Ida did to the southeast corner of our state last month. So that's a little overview of what we do, why we do it, how we do it, and I'm sure your readers will ask some challenging, specific questions about why we do this and don't do that.
Yes, they did, and we have quite a few of them. And some of them are a little similar, but let me start out with one that I think is a common theme, and that comes from Roe in New Orleans. And he says, I have a homeowner's policy. I have no visible damage, but did evacuate, had power out for 11 days. Should my insurance company cover the loss of use?
In my judgment, yes. By my order, yes. Assuming that Roe lives in one of the 25 parishes that were declared emergency parishes, or the governor issues a emergency declaration that triggers lots of things in the way of federal help, state help, and in my case, emergency declarations. And I did issue an emergency declaration, emergency rule 47 early on, and then followed that with a bulletin asking insurers to cover evacuation expenses like Rose. And then when pushback came from State Farm, evidencing the fact that it was not going, my ask that they accommodate the lack of a declared mandatory evacuation, that it was not going to be adhered to, I did a directive and ordered all companies writing insurance in Louisiana to recognize the totality of the circumstances surrounding the mixed bag of declarations, non-declarations, and half declarations relative to evacuation before the landfall of Hurricane Ida. In Rose's case, he evacuated, incurred expense, and that expense was caused by Hurricane Ida and is covered under my declaration, my directive for that expense. It may not exceed his deductible, and I will go into that, probably a couple of questions about that as well in the queue, or I'll wait till you select one for that purpose.
Okay, so the status right now is that you encouraged insurers to do this and then ordered them when State Farm resisted that, and that is something you have the authority to order. And does State Farm acknowledge that they're under your order to do something, or is that going to be disputed?
That may be disputed, and their tactic to date is to not comply with my directive, and whether they are going to challenge it in response to my reaction to their non-compliance, or are they going to, whether they're going to initiate a challenge through an appeal to either the Division of Administrative Law, which has jurisdiction over state agencies and their decisions and orders and things affecting people and companies in our state, or at the 19th Judicial District Court here in Baton Rouge, where challenges to state government are almost always filed, and by law required to be filed in most cases in the 19th Judicial District Court in Baton Rouge. State Farm would have the choice of either the DAL, Division of Administrative Law, or the 19th JDC to challenge it. If I have to initiate action to force their compliance, they have the same two choices to appeal it to my action to the DAL or to the 19th JDC.
So what does initiate, to go a little further down the rabbit hole, because there are a lot of people, State Farm is the dominant market share, and there are a lot of people involved in this. What does initiate action on your part mean? Like you would have to sue them?
I wouldn't sue them. What I would do is find that they are not in compliance with a lawful order that I have issued, and take action to suspend their license, which is unlikely, or fine them, which is more likely, for their failure to comply. And they would appeal, if they chose to, that action to one of those two jurisdictions that I mentioned before. I've been challenged after issuing emergency rules twice in the past. I did an emergency rule after Hurricane Isaac made landfall in Braithwaite and a lot of damage in Laplace back then. And the Hospital Association challenged my emergency rule at that time in the 19th Judicial District Court. And it ended up being litigated up to the First Circuit Court of Appeals, where in a very convoluted 100-page decision by a very narrow, divided court, the case was remanded back to the district court for further litigation. And I reached out to the Hospital Association, and we agreed to dismiss the litigation. And I agreed to not pursue the issue that they were objecting to at that time. And it hasn't arisen since. But last year, at the beginning of the pandemic, I issued an emergency rule on a delegation of emergency power by the governor, as has been the case each time post-Katrina, and with Isaac and Gustav and the floods in Baton Rouge and Lafayette in 2016. Those emergency rules were authorized, if you will, by a delegation of emergency power issued by Governor Blanco back in Katrina, Governor Jindal in Gustav, and Governor Edwards in the pandemic and this case. And we were challenged last year by United Healthcare for some of our emergency rule provisions relative to the pandemic. And that was done in the DAL, and we prevailed there as well. So that remains to be seen, and it's frankly, at this point in State Farm's court, once we have a response from them relative to complaints we've received, we will take our action, and that may precipitate a response in the court system by State Farm.
Okay. Let me get to some of the more specific questions. As I'm sure you know, because you've probably done this before, most people ask questions that are very case specific to themselves.
Yes, sir.
But the questions are often similar. One question that comes up, and again, a lot of people ask this question. Betty of Metairie, the first question was, will FEMA cover my hotel expenses if I don't meet my deductible and insurance does not pay?
Very good question, and very complicated question. FEMA covers generally losses that a owner of property incurs that are not insured. And sometimes the question is asked, do they cover deductibles? And generally speaking, what the program allows for is a ceiling of uninsured compensation. And it may include the deductible aspect, but if the uninsured claim is for more up to their ceiling, which I think is $35,000, if I recall, then the deductible is not honored, or it's honored first and then another 25 or 30,000 added to it because of roof damage or tree removal or all of the above. So that question certainly doesn't fall under our jurisdiction. We don't oversee that program. It's under state government, under the Homeland Security aspect of state government, who administers those federal dollars. But we do have a role in it, and that is giving to the Homeland Security folks administering the program from insurers the information necessary to determine what coverage there is and what payments have been made and what has been denied for an individual applicant. So our general information is apply for the assistance, do it immediately, do it now, not later. Don't wait to get your claim filed and resolved. Get in line sooner rather than later, and whatever assistance you may need in getting the insurer to cooperate with what FEMA is requiring of you to pursue that assistance. If your insurer is not forthcoming and not responsive to the information you require, contact us, 800-259-5300, or our website, LDI, Louisiana Department of Insurance, .la.gov.
Okay. This question comes from New Orleans, and it is, if I paid my deductible for a claim from Hurricane Zeta, does it apply to my Ida claim because both hurricanes are within a year of each other, although not in the same calendar year?
Good question, and I've heard it before.
Okay.
And the answer is no. The statute says one hurricane deductible per hurricane season. So that runs from January to December, and does not let you combine two events in a 12-month period, as happens to be the case with Zeta from last year and Ida this year. But notwithstanding the fact that you can't take advantage of what you didn't get paid for last year, you should still file your claim and get as much as you're entitled to this time, even if under your deductible amount, because we're only just now passing the halfway point of this hurricane season. And as the reader said, his claim for damage last year was late in the season in October. So we still have exposure for at least another month and a half, technically for 2.5 more months till the end of November, for damage from another event. And if you file for a claim for Ida damage and don't collect money, have a $5,000 deductible, named storm or hurricane deductible, and only $2,500 of covered compensation due, then that $2,500 that you don't collect this year for this event will be available, will lower your deductible for the next event by $2,500.
Yeah. Okay. Well, let's hope we don't have a next event, but
Absolutely.
I appreciate the clarity of the explanation. This question comes from Michael in New Orleans. We have a wind damage claim on our roof that started before Ida. Now we have more damage. Can the new damage be added to the original claim?
Not if it's hurricane caused. There's two different deductibles involved. If the wind, well, it depends on the policy. Some policies have a wind and hail deductible, in which case both of them would be under the same annual deductible. And others have a hurricane, others have a named storm. But the bulk are either hurricane or named storm. For a wind damage not associated with a hurricane or named storm, that would be covered by or have applied to it your all perils deductible, which is generally $1,000 for a broken water pipe or a kitchen fire type event, or wind damage to a roof, not a hurricane wind damaged roof. So that part of that claim would be subject to the all perils deductible. The further damage caused by Ida would be subject to the hurricane or named storm deductible. And that sounds convoluted, and it is complicated, but it's probably pretty easy to adjust, because that previous claim, having been filed, I'm sure was adjusted, and the adjuster would have taken pictures and documented what was there before the Ida damage was added to it.
Okay. This comes from Mel Edward in New Orleans, and this is another common theme. Why are insurance deductibles so high? They seem to work against the insured in times of need. Some are saying it doesn't pay to have insurance.
It certainly does pay to have insurance. And the reason why coastal states, almost all of them, I don't know for certain, but anecdotally, I know all the Gulf Coast states have hurricane or named storm deductibles. And they became widely known and became more pervasive in the industry after Katrina, which cost insurers in Louisiana alone $23.3 billion in insured losses, which is still today the all-time record-breaking event in the history of insurance anywhere in the world. 9/11, the earthquake and tsunami in Japan, no other event equaled the $23.3 billion paid to policyholders, not counting flood, in the aftermath of Katrina. And that also doesn't count what they paid in Alabama and in a large number, I don't know the number, in Mississippi. But that $23.3 billion for Louisiana is our record event. Going to be challenged, I'm afraid, for this event, Ida. But in the aftermath of Katrina, people became aware of the fact, my wife included, when she filed our claim for the tree that fell on our house, and called and said, did you know we have a 2% named storm deductible on our policy? And my answer was, Yes, no, I did not know it, but our agent was our neighbor down the block, and he probably made the offer to me to either buy it down to an all perils deductible at a higher premium or self-insure for that 2% of the insured value. And the advice I give everyone is whatever you can afford to self-insure and take on the risk of, do so, because you are avoiding paying overhead, paying profit, paying commissions, all that's built in to the premium of an insurance policy. So that if you can avoid paying those expenses to buy insurance, do so. And I would make that decision again if I had that choice. But they are truly very burdensome for a lot of property owners in vulnerable to hurricane events like the state of Louisiana, like the state of Florida, like the state of Texas, Mississippi, and Alabama as well. But probably more so in our state than anywhere else on a per capita basis, because so much of our population, 40%, I think, is what is generally referred to living below I-10, I-12 in great vulnerability to hurricane damage when we're the victim of one. So what they do allow, though, is they allow for companies to do business in these exposed, vulnerable states on the Atlantic and Gulf Coast. And if they were banned, which the legislature certainly would have the right to do, the cost of insurance would go up significantly and become unaffordable for a great portion of our state's population.
So these hurricane deductibles, which I know some of these questioners are complaining about 5% hurricane deductibles. So the hurricane deductibles are like a how many coats of paint do you want deal. And if you want to pay for a lower deductible, you can. But in many cases, people who are complaining about 5% deductibles made that choice perhaps unconsciously.
Yes, and the 5% became common about 10 years ago when Allstate was trying to reduce their exposure. When Katrina hit, State Farm and Allstate had 33% and 22% of the market share for homeowners in our state. The largest market share both of those companies had in any of the 50 states they do business in. I won't bore your readers with how that happened and why that happened, but it was the status we found ourselves in at the time of Katrina and Rita. And after that, Allstate aggressively and quickly tried to downsize their exposure in Louisiana. And I confronted that effort by saying we were unique, and still are, in that we have a consumer protection statute that I call our 3-year protection statute. It has been on the books since 1992. And what it says, and it's only in Louisiana, for a homeowner's policy consumer, if your company and you have been doing business for 3 or more consecutive years, you and that company are married, I call it, for as long as that company does homeowners business in the state of Louisiana. Unless, there's a couple of exceptions, unless you have 2 or more not act of God claims in a 3-year period of time, or you don't keep your property up in the condition it was when you were insured, you don't pay your premium, you try to defraud the company, or your company comes in and gets a waiver based on a threat to their solvency. And that 3-year protection statute is very unpopular with insurers, in particular the big national ones, State Farm, Allstate, and the rest of the major companies. Allstate, to accelerate the attrition that was taking place in getting themselves down from the 22% of our market they had at Katrina time to the 11% they have today, imposed a 5% named storm deductible, up from what had been 2%. And a couple of years after that, State Farm did the same thing. In fact, I ordered, I guess, or no, I didn't order. I requested State Farm when they did it with 33% of our market share initially, to offer their customers for at least 1 year the option to buy that premium back down from 5% to 2% with the additional cost. And they did that. They accommodated that request and got themselves to where they wanted to get down to 25% of the market today. And then offering again for folks to buy it back down. So the combination of those two big companies results in about a third of the homeowners' policies in the state having a 5% named storm deductible, and the rest have generally 2 to 3%.
Okay. Kia from New Orleans says, I submitted my claim to my insurance company, but have not heard from them yet. Who should I contact regarding my claim decision? And I guess that sort of implicates the question of, like, is there a certain amount of time that an insurance company has to get back to you?
They do, and it's spelled out in statute, and it authorizes me to give them an additional 30 days, which I have done in this case, as I did in the Laura case last year. So a total of 60 days to make contact with their company. And if this is unusual, though, that Laura reader should reach out to us and file a complaint for having failed to hear back from her company by now. This is 15 days, are we? 18 days. Yeah, 18 days since landfall. And I would expect that they would have been in touch with her by now. Again, that number is 800-259-5300.
Okay. And how many, tell us sort of like, I know a lot of, probably you're getting a disproportionate volume of calls. How is your staff doing in terms of keeping up with all the callers and stuff like that?
The first day we were overwhelmed, and that was the day after the Tuesday after the hurricane hit. Monday was actually the whole week. The offices were closed, but by Tuesday after the hurricane, we had 30 volunteer employees to come in, even though the state offices were closed, and field those calls. And we did have a long wait time of about 20 minutes that first day. It's been 1 minute because we can monitor that with our IT system here at the department. It's been 1 minute since, but the volume is far outpacing what we had last year in the aftermath of Laura, and is notwithstanding the fact that we have been able to keep up with it up until now, it is concerning to us, and we're looking at adding some staff from other divisions in the department to assist the consumer affairs folks who are fielding these calls. But right now we're able to keep up with it. I will add that I've been offered by the NAIC, the National Association of Insurance Commissioners, and many other commissioners around the country to add phone connectivity to those offices to keep pace with the request, and we're considering that as this continues to increase, the volume continues to increase.
Okay. Gina from New Orleans says, can I expect my premium to go up or be dropped by my insurance company if I file a claim?
Great question. And the answer is absolutely not. Two laws apply to that. One law applies to it. And it says you cannot be dropped, nor have your premium increased or your deductible increased or any of your coverage affected by virtue of filing a claim for a act of God loss. And hurricanes are certainly considered under the law to be acts of God. And so don't be intimidated. Don't hesitate to file for fear of being canceled or having your premiums increase. Premiums for hurricane coverage, for example, are not based on claims experience. You can be non-renewed for non-act of God claims, broken pipes, dog bites, kitchen fires, etc. But for tornadoes, hurricanes, and such, that is hailstorms. Those are acts of God that are by law prohibited to be used to increase premium or non-renew folks.
Okay. I got an email from someone this overnight, I guess a guy like a night owl, and he said, and I don't think it was the person who asked this question, but he said that he has heard you say that before, and yet his experience is that the premiums do go up.
Well, premiums do go up.
Mhm.
There's no question about it. Even the 8 years with no hurricane events, premiums went up 1% per year.
Yeah.
And last year, while I anticipated in the aftermath of Laura, Delta, Zeta, and the other two, that premiums would go up by double digits, teens perhaps, percentage, they actually went up about 5 to 6%, which was less than I anticipated. And there's two aspects to premium setting for homeowners insurance. And one is that events don't really matter. They don't play into losses, are not allowed to be recouped, because unlike auto insurance, which is based on the companies looking back 2 or 3 years and seeing what their loss experience has been in the state as a whole, and then in zones, which typically are zip codes, to determine what their price going forward should be. On the homeowner side, for hurricane exposure, that's not done. What's done, the loss experience, the past history is not relevant in a rate filing. They use what's called CAT models that have been around for about 25 years now. The three big ones being AIR, RMS, and EquiCat that almost all the companies use. They predict, based on that company's book of business, how close it is to the coast, how well constructed it is, what risk there are other than coastal exposure, built into their book of business, their total compilation of risk, homes, risk, value, distance, elevation. They don't consider flood because flood's not covered, but they project and they also take into account meteorological factors, including how many landfall hurricanes the state has experienced, and then different parts of the state have experienced looking back 100 years, and they project losses for that company going forward. That's already built in. The one factor that hurricanes do influence that is passed on in future rate increases is the cost of reinsurance. And in our state, we are very dependent on the international reinsurance marketplace, 2/3 of which is located offshore in places like Bermuda, Toronto, Zurich, London, etc. And by that vehicle, by the international reinsurance marketplace, small regional carriers are able to offer coverage in high-risk areas. And for the most part, they reinsure themselves up to their chin, 95% of that exposure. And that gets spread around the world, not just spread to North Louisiana, where there's just not enough policies and business to effectively and affordably spread our significant coastal exposure.
So do we expect, I'm sorry, go ahead.
Yeah, I was going to say that the reader did have a rate increase, but it was not directly based upon the fact that, it certainly wasn't based upon the fact that he filed a claim. But we did have an increase of 6% during last calendar year. And this year is tracking through the first 8 months, very similar to what happened last year as far as premium for homeowners cost.
I guess one thing that's unusual about the homeowner insurance business in Louisiana is in most of free enterprise, you're trying to increase your market share, but these companies are trying to decrease their market share. Do you expect more of that after this storm? Do you expect companies to try to decrease their market share?
Oh, sure. There's always an after event exodus and run for the hills and get out of harm's way. that is generally, historically, throughout the insurance industry, throughout its history, a group called the surplus lines companies that are unregulated and for rate and form, typically, not in all cases, but typically. And they step in where the big boys, if you will, the admitted carriers, exit. And they're the first to come in to high risk events and aftermath and write. And their rates are not regulated, so they charge whatever the market will bear. And once they start making making money on that business, and the admitted carriers, the big boys, see that they're doing well, they return to that market and put their toe in first, and then jump in for the opportunity that's presented. We have been incredibly successful in the aftermath of Katrina. We now have 136 companies writing homeowners business in our state, 25 of which do 75% of our market. And of that 25%, of 25 companies that are providing 75% of the coverage, I'd guess a dozen of them are small regional carriers that weren't in our state before Katrina. And we've been able to attract, better than any other coastal state, frankly, to come do business in Louisiana in competition with the exiting major national carriers.
Well, okay, so it's cyclical.
Very much so.
Yeah, okay.
Very much so.
Okay, let me ask a question from Jerry in New Orleans. All these are from New Orleans. It's interesting. I sustained roof and fence damage during Hurricane Zeta last year, filed an insurance claim and received payment. I had both repaired, not replaced. Now I have both roof and fence damage, again, much more from Hurricane Ida. Can the insurance carrier disallow coverage for damage to the same roof or fence?
No, sir. That's an easy one.
Okay. They cannot. Okay.
They cannot.
They'd have to replace your roof every year if we had a hurricane every year.
Let's hope not.
Okay. Well, let's hope not on both counts. Well, let me hit you with one final question from, I guess, our unluckiest question asker asks this question. What happens if I got more damage from Nicholas, but my adjuster already came and assessed my Ida damage? Yeah. What should I do?
File a claim. No
Okay.
question about it. And having been adjusted for Ida, what was done then is documented and photographed probably. So knowing what additional damage has occurred will be easy to document as well. So go ahead and do it. It will not increase your premium. It will not result in your being canceled. These are act of God claims when they're caused by a hurricane.
Okay. And how is this treated as, like, is it treated as two claims with two deductibles, or is it?
Yeah. That's similar to the first question.
Yeah.
The Zeta deductible from last year doesn't combine because it's within 12 months. The limit of one per year is on a calendar year basis.
Okay. But this would be, if someone had damage from Ida and Nicholas, it's in the same hurricane season.
Oh, yeah.
Right?
I'm sorry. Yeah.
Okay.
Ida and Nicholas are the same hurricane. And
okay.
whatever deductible they didn't get paid as a result of for Ida is now reduced off of whatever their total hurricane deductible is.
I see. Okay. Well, you've been very generous with your time. And is there anything else that you feel like people should know that didn't come up in the questions?
I do want to go back to that hurricane and named storm deductible for one other point. And that is, depending on your company, your deductible is for evacuation expense is different. Some companies have none at all, don't apply a deductible. Some companies include it in your hurricane or named storm deductible, and some companies use the all perils deductible, generally much lower than the hurricane deductible. So it depends on which company you're with as to which deductible would apply to your evacuation expense claim. That's separate, but part of the same law part of the same hurricane deductible in many cases, but not all cases.
Okay. Well, again, thank you very much for your time. You've been a very great explainer, as I know you always are, and I know it's going to create a lot of work for your office, and but hopefully people will get what they deserve.
Absolutely. That's our job. So
Okay.
800-259-5300. Thank you, Peter.
Okay. Thank you.